Good morning, students. Today we are going to discuss and end the chapter Basic Concepts of Economics. Today, Module 8 and Module 9 of the chapter will be discussed. In the last module, we did some definitions like national income, per capita income. Today, we are going to continue with some more definitions. The first definition for today is investment. We know what is saving, you remember? The definition for today is investment. Investment is defined as the act of using money for the production of capital goods. Investment means that you use money for producing machine. Capital goods here imply machines. Okay, so when you are investing money for the production of machines, that thing is called investment. Or it is the act of adding to the existing stock of capital assets such as machines, tool, equipment, building. So I take an example. Suppose I say that in my factory in the year 2017 there were 10 machines. Okay, and in the year 2018 my factory had 25 machines. So in the year 2017 my factory had 10 machines. In the year 2018 my factory has 25 machines. So how many machines have I added? I have added 15 machines. So the 15 machines is the new investment, and investment is the act of adding to the existing stock of capital asset such as machine, tool, equipment and building. There are three components of investment: producers fixed investment, investment in residential and non-residential structures, and investment in stocks. One by one I'm going to discuss them all. Producer fixed investment is the investment in tool, equipment, machines. That is what is called producer fixed investment. This kind of investment is done by the producers in machine, tool or in the process of production. The second point is investment in residential and non-residential structure. When we invest in offices, buildings, houses, that is called investment in residential and non-residential. Residential means housing and non-residential means office or buildings. The last point is investment in stocks. Okay, there are two kinds of stock of finished goods and stock of raw material. So the investment in finished goods or the investment in raw materials is called the investment in stocks. The next definition is wealth. Wealth refers to the stock of all those assets which are a source of income. It is expressed at a point of time like 31st January 2018. Wealth is what is meant by wealth. Okay, suppose you say that you own a house, you own some jewelry, okay, you have some cash. So all those things that are in your possession is called wealth. Okay, so wealth is the stock of all the assets or the belongings that you have, like house, jewelry, cash, okay, which are a source of income for you. They are going to give you some income. When we say that, suppose I have a building, okay, that building is going to give me a rent. If I give that building for lease, it is going to give me rent. So that asset is generating some income for me. Same way, if I sell the jewelry, I'll be getting some money. So jewelry is also a source of income for me. All these together, all the belongings you have that can generate a source of income is called wealth. And it is expressed at a point of time. It is a stock concept. Generally, we say that on 1st January, I have a building, I have a house, I have jewelry, I have cash. So you say that wealth is measured at a point of time. Okay. Welfare. Next concept is welfare. Welfare is a sense of satisfaction and happiness. It's a sense of well-being among the people. How do you attain welfare? You attain welfare when you have a sense of satisfaction that you are achieving everything. For a student, being educated, using phone, okay, having good food is what is called welfare. It is basically a state of happiness and a sense of well-being. A healthy mind will be a welfare mind, right? So welfare is basically a sense of satisfaction, a feeling of happiness. Business cycle is our next definition. You can see the business cycle there: prosperity, peak, recession, depression, recovery. Okay, when we discuss business cycle, we discuss it with various phases of the business cycle. If we go to the definition, business cycle is defined as the recurrent fluctuations in the aggregate economic activity. Okay, so what is meant by business cycle? It is recurrent. Recurrent means continuous fluctuations. Things will never go good in economy. A time may come, like this is the time during the pandemic. The activities have stopped. So we are into a state of recession. Okay, the activities have totally stopped. So the things will not be the same. Sometime there is recession, sometime there will be good time called peak. So it is a continuous fluctuation in the aggregate economic activity of a economy. Whenever we explain the business cycle, we explain it by the various phases of business cycle. Okay, and when we talk about the phases, there are three things that tell you about the phases. It's the income, the output, and the employment. Okay, currently in the current pandemic situation, income is very less of people. Output is what is called production. So production is there in some sector like IT sector, but production is less or negligible in other sectors. And employment is when people are getting employed. Okay, people are working. So the concept or the various stages can be explained with in contrast to three variables: income, employment, and output. Okay, so I'll explain them to you one by one. Four phases of business cycle. The main four phases are prosperity or expansion, recession, depression, and recovery. The four phases are prosperity, recession, depression, and recovery. So when we explain the prosperity stage or the expansion stage, there is increase in the level of income, output, and employment. The three keywords here are income, output, and employment. These are the three main keywords. The expansion stage, the economy reaches the peak and then it starts moving down. This is called the recession. Recession is sustained period of fall in level of income, output, and employment. This is a sustained period of falling in level of income, output, and employment. Everything is falling down, like the economy is going down now. This is depression. Depression is a severe recession. There is no production, no income, no employment. And after recession and depression, the economy goes into recovery. Recovery is steady rise in income, output, and employment. So whenever I'll have to explain the four stages, it is to be explained in respect to income, output, and employment. First is expansion, everything is increasing, income, output, employment, peak, a very good situation. Recession, there is a fall like we are having now, fall in income, output, and employment. Production stops, production is less, income, output is less. Then comes depression, severe recession, not a good phase. And then there is a stage of recovery. The cycle goes like this: prosperity, peak, recession, depression, and recovery. Okay. Depression is severe recession, large reduction in income, output, and employment. And finally, recovery. Recovery means economy is recovering or steady, slowly increase in output, income, and employment. Aggregate demand. The word aggregate means total. So aggregate demand is the total amount of goods or services which all the buyers in the economy is demanding or they want to purchase. Aggregate demand is also equal to three components. Okay, you can see here AD, aggregate demand. AD is equal to C plus I plus G. C stands for consumption expenditure by household. I stands for investment expenditure done in India, and G stands for government expenditure done by. Whenever the definition of aggregate demand is asked, you need to write this plus you need to write this both. You need to write that it is the total amount of goods that all buyers are purchasing, and you need to write the formula as well. Coming to aggregate supply, if aggregate demand is the quantity purchased, aggregate or the total supply is the amount that all the producers and all the firms in the country are supplying. So what is meant by aggregate supply? It is the availability. Okay, aggregate supply is the total amount of output or the production, total amount of output which all the firms, all the producers of the economy are willing to produce and giving to the public is what is called aggregate supply. The last concept of the chapter, stock variables and flow variables. In this we are going to do the meaning of them as well as the difference of stock and flow variable. Stock variables are generally expressed at a point of time. Suppose I say on 1st January 2018, I have such amount in my bank account, I have one building, I have one factory and jewelry of this much amount. I am saying that I am expressing the wealth at a particular date, at a particular point of time, 1st January 2018. So it is a stock concept. Stock is something that is expressed or shown at a point of time. And flow variables are expressed per unit of time. If I say that I earn an income of 5,000 every month, that is per unit of time. If I say that I earn an income of 5,000 every month, it is expressed in unit of time over a period of time, right? It is not at the point of time that I am earning the income. I say that every month I am earning 5,000 income. So it flow variables. Income is a flow variable. Income is expressed as per unit of time. It is not expressed at a point of time. It is expressed per unit of time. And since stock is measured at a point of time, they do not have any time dimension. The wealth does not have any time dimension because it is expressed at a point of time. And income have a time dimension because I am saying that my income for every month. So I am specifying some time. Income is a flow concept and I am saying my income is 5,000 every month. I am specifying a time. So flow variables have a time dimension. Stock variables do not have time dimension and flow variables have a time dimension. The example of stock variable is wealth. The example of flow variables is income. Thank you, students. That's all for your chapter Basic Concepts of Economics. Tomorrow we are going to start with chapter 1 Definition of Economics. Thank you, students.